Is Mark Carney's housing plan quietly making Brookfield and billionaires rich while taxpayers pay the price? Canada's ambitious plan to build 500,000 homes a year by 2035 has been heralded as a solution to the housing crisis. Guided by former central banker Mark Carney, now leading the Build Canada Homes initiative, the government promises to finance this push with $25 billion in debt and $1 billion in equity, with a heavy focus on modular prefab housing. On the surface, modular builds promise speed and efficiency, but beneath the optimism lies growing concern that this strategy is less about affordability and more about enriching powerful corporate players. Central to the debate is Brookfield Asset Management, where Carney previously led environmental and social governance initiatives. In 2021, Brookfield acquired a major European modular housing firm in a $5 billion move that instantly positioned it as a global prefab heavyweight. With Canada now signaling federal contracts for modular builds, skeptics warn that Brookfield stands to be a key beneficiary, allowing previously shadowed corporate ties to shape taxpayer-funded housing policy for profit. In Ontario, billionaire Peter Gilgan of Mattamy Homes fame is expanding into modular manufacturing with Stellamar Advanced Manufacturing Incorporated, which aims to produce thousands of housing units soon. The company touts robotics and AI to reduce costs and speed construction, and while that may appeal to planners, many Canadians question whether compact prefab units truly satisfy families in search of space and a yard to grow into. Rumors and online chatter suggest Stellamar may be linked to Brookfield through joint ventures formed years ago. Though documentation is scarce, speculation about insider connections deepens public skepticism. It feels like a revolving door of influence. Corporate giants gain access to taxpayer dollars, and government leaders champion those same interests in return. Proponents argue modular housing offers a breakthrough solution: build faster, build cheaper, and fill waiting homes. Analyses show prefab housing can cut construction time in half and building costs by around 20%. Yet critics note that the vast majority of the $26 billion funding is channeled through corporations, not directed toward affordable or publicly owned housing. The taxpayer subsidy may simply line private coffers. On Canada's west coast, a similar unease over outsourcing has erupted around BC's decision to build ferries in China. Local shipyards such as Seaspan were bypassed, leaving workers sidelined and communities frustrated. Observers see parallels in the housing strategy: contractor profits prioritized over Canadian jobs and local investment. Financial mismanagement fears deepen as the Bank of Canada reports a $3 billion loss last year, part of an $8 billion hole on its balance sheet. Meanwhile, taxpayers are on the hook for indemnities of $19 billion and $6 billion in bank interest. These numbers feed a growing narrative. Public funds are eroding while elite institutions thrive. The $4 billion Housing Accelerator Fund faces its own scrutiny. By some accounts, little to no homes have been completed under its umbrella. Critics accuse the government of issuing high-profile announcements without measurable outcomes, while home prices, rental costs, and mortgage defaults continue to climb unchecked. Political scandals are fueling distrust further. In Newfoundland, MP John Abbott stepped down amid allegations surrounding mail-in ballot irregularities following the 2021 provincial election. Although no formal charges were pressed, the incident intensified voter cynicism and heightened calls for transparency and accountability. Environmental headlines add to the tense backdrop. Saskatchewan has seen a surge in arson-related wildfires, prompting calls for stricter laws, asset forfeiture, and extended prison terms for convicted arsonists. At the same time, some climate skeptics have cheered recent drops in North Atlantic sea surface temperatures, doing so ironically and sarcastically to argue that carbon taxes may be unnecessary or overblown. When modular and affordable housing came under debate in Parliament, tensions boiled over. Liberals defended prefab as an innovative path forward. Conservatives fired back, claiming Canadians don't want to live in assembly line boxes and blaming Liberal mismanagement for inflation and skyrocketing housing prices. Growing frustration has led to fresh demands for accountability. Some propose that politicians should face escalating fines, or even jail time, if they fail to deliver on public spending promises or mislead citizens. It's an unprecedented push for penalties tied to performance, reflecting the depth of disillusionment with traditional political methods. Despite controversy, some housing experts suggest modular homes have a place in Canada's future. They can be built quickly, with less waste, and with predictable quality. But there's also agreement that adapted standards, spacious design, and long-term durability are essential if these homes are to serve real families, rather than remain symbolic. As it stands, Carney's housing vision hangs in the balance. Will it usher in a genuine era of affordable homes, or will it be remembered as a funnel for corporate profit cloaked in public policy? For the average Canadian, the central question looms: who will truly benefit, and are taxpayers paying more than they bargained for? The tension between innovation and profit, between public need and private gain, defines this moment. Canadians are watching closely, ready to call for clarity, fairness, and reform. The future of homes in Canada may hinge less on plans and more on ensuring that policy serves people, not just power.